Welcome back, and continuing to roll through the 12 steps order of operations, the asset protection chapter. So when we talk about like risk management, asset protection, how and what are we protecting against? We immediately started thinking about insurance. So, I talked about in the previous episode, we talked about home and auto insurance, life insurance, health insurance, disability insurance, general liability insurance, workers' comp. Like these are just basic. This isn't a list of all inclusive, but these are very common. But let's think about it from a different perspective. Insurance is managing risk. Like you're paying a money in the form of a premium, and then if something happens, the insurance company comes in and hopefully approves your claim and pays it out. But let's think of it from a different perspective. Insurance is also paying off your mortgage, where you don't have a $2,000 or $3,000 a month monthly payment going out. It's equity in your home, where you've paid it off to where you can tap the equity and use that equity for another purpose if you absolutely need it. Insurance is having margin in your budget to where if you had $7,000 a month coming in, you're not spending $7,000 a month. Maybe you've got $15,000 a month coming in and you're only spending $7,000. Well, there's $8,000 that needs to go towards something, ultimately growing your wealth and putting you in a better position in the future. Maybe it is giving money to your local church. Maybe that is something that you say is a non-negotiable and I absolutely want to do it. And that's not for me to say yes or no. That's for you to determine on your own. And so if you think that that's something that you need to do, then by all means do it. People work with me for a skill set of understanding the financial planning process, but it's not for me to come in and tell you how to spend your money. So your definition of risk management and insurance may be a little bit different than others, and there's nothing wrong with that. So we got to make sure that your emergency accounts are funded. You've got opportunity accounts, and I do segregate these different from emergency account. Let's just say you had 3 to 6 months of emergency funds available. Well, the opportunity accounts are going to be specifically for a down payment on maybe a rental property, or paying cash for a car, or funding some type of future investment. Insurance could be improving your career skill set. Maybe there's a new tech skill set that you need because coding is no longer as good as it was. I was reading an article the other day that was talking about the number of coders is actually on the decline, and that's something that AI is now replacing. So if we know that this transition to artificial intelligence is coming, then we need to figure out how can we get in front of it, or at least ride on the coattail of a skill set that is going to pay out for our full career. The last one on here, we talk about physical fitness, and this is something that I've slacked on. I've spent more time trying to grow my business, but I let my physical fitness sort of slack. So what I got to do now is go back and get my physical fitness back to where it needs to be, and that involves spending less time behind a computer or behind a podcast microphone or behind a meeting, and out running or swimming or hiking or doing something that is physically demanding so I can get them calories burned off, and maybe stopping a few less times at Krispy Kreme. That would be a way for me to ensure that my health is on the up and up. Ultimately, at the end of the day, we cannot dictate the future. There's so many things that are outside of our control, but ultimately what we're trying to do through this whole financial planning process is we're trying to stack the odds of all the things that we can control in our favor. We can pay off our home early. We can do a bi-weekly mortgage payment to where it cuts off 7 to 10 years of payments. That's just one extra payment a month. So these aren't big things. These are just little steps. And the goal, as my role as a financial planner, is to ultimately learn all these different levers that we can pull and stack the odds in your favor. There's so many different things that we can do. There's different ways to make your home and auto insurance cheaper. There's different ways that we can stack life insurance policies to where certain policies are going to achieve certain goals that may not even be used, but ultimately you don't have to die to use the life insurance. There's different things that we can do with your health insurance, raising deductibles, or getting on a high deductible plan so that we can deposit money into a health savings account that can turn around and come out tax-free and grow tax-free for another 20 to 30 years. Or even if you're in retirement, use the money that's in the HSA to pay off certain type of health-related expenses. There's so many different things that we can do. I think a good financial planner is going to have a background in insurance as well as investments, and that way you can keep a tab on managing risk but also growing money. So we'll continue working through these different subtopics in the third step of the financial wealth steps order of operations, and I'll see you in the next one.